Welcome, ladies and gentlemen, Commodity TV. It's time for a company update. Treasury Metals, the undervalued gold developer in Ontario. Gold is rising, but not all stocks rise with the gold price. Astonishing is that even high-quality projects in Canada, in one of the best mining jurisdictions in Ontario and Dryden, are not yet discovered, and stock price is very cheap. Treasury Metals is such a company with their Goliath project in the development, strong shareholders and a solid resource estimate of 1.5 million ounces with improved gold grades both underground and open pit. The M&I resource is at 1.229 million ounces at 2.36 grams gold equivalent, and the inferred resources are 226,000 ounces at 3.5 grams gold equivalent. There is exploration upside potential with successful infill and expansion drilling to commence soon. The Goliath Gold Project property size is 50 square kilometers and additionally owns Treasury Metals the Valuation and Gold Road projects in the district. Goliath will be the only permitted mill in the area. But exploration and development at other projects in the area is ongoing, which creates opportunities to combine other adjacent projects. In the neighborhood are over 2.5 million ounces M&I resources within 25 miles of Goliath that have not begun their own permitting yet. Dryden is a regional hub and 10,000 people living there. It offers local workforce, hydropower, natural gas, access to the Trans-Canada Highway and rail connection. What makes Treasury Metals now so special? They received approval from the Minister of Environment and Climate Change for the Goliath Gold Project to proceed. This decision was based on the environmental assessment called EA. The Minister's approval is the completion of plus 5 years of mine permitting work. The EA is complete at both the federal and provincial levels following a thorough and science-based process entailing significant engineering, environmental impact, detailed operations and community work. This is one of the real major milestones Treasury completed, as it is strategic for both Treasury Metals and the immediate district to have the permission for up to 5,000 tons per day. They have now also the permission to proceed to construction permits, ultimately moving toward a construction decision with project finance discussions can then resume too. The landscape of possible acquisition and consolidation options widens now too, as the valuation is too low for the company today. For a company with 13-year mine life, only approximately 140 million Canadian dollars capex, AIC well below $700 per ounce, and an annual production of 90,000 ounces gold in one of the worldwide best jurisdictions. What's next? The company will now drill down dip and plans an infill drill program ahead of the PFS. The completion of the pre-feasibility study and new resource estimate is scheduled in Q1 2020. They will also commence the provincial construction permits upon completion of federal permitting. In 2020, they want to do an expansion and step-out program, an IBA, and a feasibility study. This is a heavy work program, but raises the value of the company with each step further. Check out the company and bye-bye from Switzerland.